Okay, welcome back to our second episode of Stock Shots. It is October 30th. It is about almost 8 o'clock at night on this Sunday night. So last week we talked about this right here. We had an expectation and we waited for confirmation. Okay, so before we even get into anything else, I'm not here to tell you to buy, sell, trade, or put your life savings into something you know nothing about. It is about you learning and earning. So do your own due diligence. This is just my opinion based on the past. I'm looking to the future to see what the past has already said. So once again, my opinion, this is my shot at a stock. Next week could be yours. Now, with that being said, we had expectations. We waited for confirmation. Our confirmation was given. We had a really good week last week. Why? Because our portfolios went green. Why? Why? Well, surprisingly, earnings came out for a couple of companies, and they weren't super stellar, but they were good enough, right? So earnings plays a great deal in a lot of our trades. So this is part of fundamental analysis. I am professionally neither one of a technical or fundamental analysis. I like technical is my favorite, but I do pay attention to fundamental, especially during earnings season. It makes a big difference because you can make a lot of money very quickly, depending on the market you are in at the time, based on fundamental knowledge or news coming out during the day. So, with that being said, let's look at our new chart. We have a brand new candlestick here in the weekly. It was what we were hoping for, a green candle, a nice strong green candle. Now, we had a bounce off of our first area that we were concerned about, which was right here, our support area. Now, with that being said, off of that support area, we had a nice bounce. We are hoping that it continues because I'm looking to get out of the market next week at my area of resistance, which is going to be 39.45. I am hoping at that point the market gets extremely tired. But I will say this. It looks like at this point, the market wants to go a little higher. Because if you look here at the volume, we have higher volume in the last couple of weeks than we did before. So we had a lull for about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, about 16, 17 weeks. And volume has picked up over the last 2 months. Now, it hasn't gone past anything that we were expecting, but it is picking up. So this could be our bear market rally. That bear market rally is important because you can use that as an entry point. Why? I'm looking for it here at 39.45.41, but I already know nothing is exact in the stock market. Nothing is exact on a chart. What I'm really looking for is an area. So around this area, I'm looking for a pullback. That pullback can signal my entry to take advantage of this grizzly line. That's right. It's my favorite thing. Some people call it a trend line right now. Since I've been doing this for a couple of years now, I'm looking at it as a grizzly line. Every time it gets up there, guess what happened? Them claws and paws come out and we getting them smacks. Smackety, smackety, smack, smack. And that means for me, I'm making money because I will be trading options going down. I may be into the futures market and I may be playing it to the downside. And the more information you have, the more experience you get, and the more markets you are exposed to, the more money you can make. I'll just put it that way. It's very, very simple. I'm looking for more downside, everybody. And the reason being is this. Let's do a quick measurement here to here. That is approximately almost 27%. So it's at 26.73%. Okay, that's from the beginning of the year. The S&P has come down approximately 26.73%. Now, in other big recessions, bear markets, this may be only a quarter of the way or halfway down. There is more coming. That is my opinion. You don't have to share it, but hey, if you got a comment, put it in the comment section. For this potential bear market rally, let's look at the last one. So the past is going to tell me about my future. All right, so I'm looking at 16% here. So the last bear rally was 16% up, 592 points. Okay, so let's just take that as our measuring stick. Let's see if this would measure out. Well, that would give us maybe an entry to the downside around 4,080, 4,070. So around that area, 4,079.33, around there. If it continues up, that 16% move will take us how much further? Let's see. Another 4%. Now, 4% is still better than most people's savings account. It's still better than most people's bond markets at sometimes. So what we can do is take advantage of that. If you can afford to jump in, be a sniper. If you want to wait and pick up the bag when other people drop it, I am with you on that because I could definitely do it with you. Now, in my opinion, I feel like we're going to come down to my level that I've been waiting for a while to make a good amount of money, which is 32.11. That is going to be at least, I'm going to say, from the grizzly line right here. That's going to be another 19% down from that grizzly line. Now, I've seen the grizzly line. I'm happy with it because I got not one, but two touches on my very first one. Let's put it this way. My very first touch on this grizzly line, I got a gift. All right. Tweezers right on the top. I got strong rejection. That made me really happy. Really happy. Did I get in there? Of course not. No one gets in perfectly. But I did get in and I had a little fun. Now, my next area. Another area of strong rejection. Right up here, right at that grizzly line again. It gave me a strong rejection on that candle. Remember, these are all weekly candles. Every candle here is 7 days. So for 7 days, it messed around up here. But it did not have enough to get past it. Now, coming up here again, we already have it marked. If I get here, let's just say I'm looking for an entry right here. So let's say entry to the downside. That's at, let's see, that's at 4011, 4015. That's where I would like to start. Let's just say not getting in heavy. I might just start getting a couple of contracts on options for puts going down from this level. Now, if it goes up, I might start buying a couple more because I have a strong conviction that even if it goes up a little bit higher, I don't think it's going to reach 42.20. I feel like it's not going to get there. That's a pretty higher level. And then based off of the history here, the last rally didn't get to the last time it touched. So this is the next touch is coming. It may come up a little bit further, but I don't think it's going to get to 42.20. So I might scale into the trade and then scale out of the trade as it comes down, secure my profits because $20 is a lot better than missing $20, if you know what I mean. So this has been another episode of Stock Shots. I hope that you take this 10 minutes out of your break, out of your morning, out of your time in the bathroom, wherever you're at. Get some information that can make you some money. Because if you got the information, you're ready for any situation. All right. So if you got them expectations, wait for confirmation. All right, everybody. Have a good week. And I hope you have a green week in your portfolio. And that is our second episode of Stock Shots. Next week could be your shot at a stock.